This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
India's state-run refiners Indian Oil and Bharat Petroleum have bought Russian oil for September and October delivery, resuming purchases after discounts widened, two company officials aware of the matter said on Wednesday. The resumption in Russian oil imports by Indian state refiners could reduce supplies for top buyer China, which had stepped up purchases during their absence. The refiners halted purchases in July due to narrower discounts and after India was criticized by Washington for its purchases of Russian oil. President Donald Trump also threatened an additional 25% levy on Indian goods, effective August 27, to penalize New Delhi for its continued buying of the oil.
Oil prices edged up on Wednesday as investors awaited the next steps in talks to end the war in Ukraine, with sanctions on Russian crude remaining in place for now and the potential for further restrictions on buyers of its exports still looming. Brent crude futures rose 50 cents to $66.29 a barrel by 0630 GMT. U.S. West Texas Intermediate crude futures for September delivery, set to expire on Wednesday, were at $62.80 a barrel, up 45 cents. The more active October contract was at $62.30 a barrel, up 53 cents. Prices settled down more than 1% on Tuesday on optimism that a deal to end the war seemed closer, which would likely lead to an easing of sanctions on Russia and an increase in global supply.
Moving on to the top news in the energy sector.
U.S. President Donald Trump's administration on Tuesday unveiled a comprehensive schedule to hold more than 30 offshore oil and gas lease sales in the Gulf of Mexico and Alaska's Cook Inlet over the next 15 years. The plan fulfills a directive in Trump's One Big Beautiful Bill Act, which passed last month, and is aligned with his administration's energy dominance agenda to boost domestic fossil fuel production. The schedule marks a significant departure from former President Joe Biden, whose administration had planned for a historically small number of drilling rights auctions as part of its efforts to address climate change.
China's industry ministry said on Tuesday it held a meeting with solar industry representatives, the second in 2 months, as it urged the sector to strengthen regulations, curb overcapacity and reduce extreme competition among firms. Representatives at the meeting were told to jointly promote the healthy and sustainable development of the industry, the ministry said in a statement. It said parties must curb low-price disorderly competition, referring to overcapacity in the sector. The discussion followed a meeting in July where the ministry said that authorities should promote the orderly exit of outdated production capacity, heightening expectations for the government to tighten the reins on the bloated sector. Next, we have the top news in metal markets. China's coal imports from its top supplier Indonesia fell 31% in July year-on-year, customs data showed on Wednesday, as softer Chinese demand and lower seaborne prices made Indonesian coal less profitable. China's imports from Indonesia totaled 13.18 million metric tons in July, down from 19.24 million tons in the year-ago period. A decline in Indonesian export volumes corresponded with softer demand for thermal imports in both China and India, which drove seaborne prices below the per-ton cost of production for a large share of Indonesia's coal miners, LSEG analysts said in a note.
The U.S. Commerce Department said on Tuesday it is hiking steel and aluminum tariffs on more than 400 products including wind turbines, mobile cranes, appliances, bulldozers and other heavy equipment, along with railcars, motorcycles, marine engines, furniture and hundreds of other products. The department said 407 product categories are being added to the list of derivative steel and aluminum products covered by sectoral tariffs, with a 50% tariff on any steel and aluminum content of these products plus the country rate on the non-steel and non-aluminum content. Evercore ISI said in a research note the move covers more than 400 product codes representing over $200 billion in imports last year and estimates it will raise the overall effective tariff rate by around 1 percentage point.
We will now look at the top news in the agricultural sector.
Chicago soybean futures rose slightly on Wednesday after 2 sessions of losses, as traders monitored results from the annual crop tour, though weak Chinese demand continued to weigh on sentiment. The most active soybean contract on the Chicago Board of Trade was up 0.02% at $10.34 per bushel, as of 0609 GMT. Day 2 results from the pro-farmer crop tour showed Indiana corn yield potential at a 22-year high, though soybean pod counts were slightly below 2024 levels. Nebraska recorded its highest soybean pod count in at least 22 years and best corn yield outlook in 4 years.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.